Hey, it's Andreas, and welcome to the channel. Today I will focus on a strategy that I would use if I had a small amount of money to invest, so let's say only $100, and I didn't want to invest in some index fund. I just wanted to find some interesting company and maybe getting started in investing. So I've exemplified this case with Immocell to just talk about how I would invest on a small budget. Alright, let's get right into it. In this PowerPoint slide, you see a graph of the price development of the shares in Immocell. And as you can see, they don't really correlate that much to the wider market. And why is this? Well, it's a tiny company. If we look at market cap, it's in Swedish here, but I'm going to read it to you in English. It's 63 million American dollars. That's the market cap. This is a tiny company. And if you try to buy this company, buy shares, you will see that the buy ask and the sell ask is very far apart, and there's also razor thin orders in the market, so a big and razor thin spread. So this is very annoying to even try to buy more than 500 shares in because of this spread. And this is why it's perfect for a smaller investment. Looking at these micro caps, you have the time to put the order in the middle of the spread and then wait several days for it to get filled. I bought this company a while back in early 2020. I started loading up on some shares, but I only managed to get like 300-400 shares or something like that, and it took 3 days to get the order that I wanted filled. So this is a very annoying company to try to buy. But if you're only just getting started and you're using small amounts of money, then you can invest in this micro cap type of companies. Why would you even want to do it? Well, let's take a look at what you get for your price, because the price is what you pay and then the value is what you get. And if we take a look at the latest quarterly earnings here from the operations side, we can see that they sold for about 5 million. So 5 million in product sales for the quarter that ended September 30th. And I took a deeper look at this, and this represents a 38% increase. So this is the type of growth that I would minimally want to see from a growth company. Compared to Tesla, they do 50% growth in car deliveries. So they're growing at a much larger pace and with a much bigger size. But smaller companies have a lot easier to grow than larger companies. And this is why historically we can see that a small cap fund with larger risk outperforms a large cap fund. And we can also take a look at the results for a 9-month period. We can see that product sales only increased by 19% in that case. So this has been something that I've complained about on previous quarterly reports, that the growth was too slow. However, in the last report, they showed great growth and they're finally profitable, as you also can see in this income statement, with a gain of 2 cents per share. And if we compare this to the market cap, 63 million, and let's say you sell for 5 millions every quarter, you sell for 20 millions in a year, and this will only grow. And they have a gross margin here that's really great. You can look at cost of goods sold, and then you see that it's almost 50% growth margin if you compare it. Let me just show you with the mouse where I'm looking. So here you see product sales and then cost of goods sales sold. So if you take that, then you see that this gross margin here, you take that and divide it by total product sales and you get it in percentage, and this will be 40 something percent, like 47 or 46%. So you can do it on a calculator if you want to, but great gross margin. And if we look at the future for a company like this, because they have some things in the pipeline, some catalysts that will send the stock price a lot higher, and that is that they have a submission to FDA, the final submission, pertaining a product called Retain that will help take out the use of antibiotics in calf beef production. So in the mother's milk, it will come through to the little calves, and this will remove antibiotics from the production, so to say. And if this goes through, then they will be able to start to have a trial of this product in the market for the third quarter of this year, 2022. And if we take a look at the graph here, this big gain that was when the market believed that this product approval would come through, but it was sent back and the FDA needed more information, and since then stock price has slowly been going down. However, with this catalyst in the third quarter of this year, then stock price has the potential to go a lot higher. And if you look at the future, and the more we look into the future, the more error there will be in predictions. But I think that a very likely scenario for this company is that it will be bought up by a larger corporation in the future to get a hold of their intellectual property. If we look at the managers, the team has been running this since back in the 90s, the same team, and developed this company, growing it larger and larger. And eventually, as the founding team gets older, I believe it's very likely that they will sell out. And what happens then? Well, you get about a 20% premium standard on a buyout for these types of deals compared to market price. So a lot of good future catalysts, a lot of value for the price, and this is the type of investments that you can do with small money. If you're willing to wait a long time for your order to get filled, you can buy these types of small companies with large risk and large potential gains. So this is just one strategy that I would use if I were to invest a small amount of money. But do your own research, and whatever you decide to invest in, I hope you make a ton of money. Trade safe. Bye bye.